and in local commerce. We're looking forward to getting started in just one moment. Bear with us. We'll be back within 2 minutes. Welcome all. Thank you for joining us. Today we're going to walk you through our online and local commerce discussion. I think there's a lot of very interesting facts in here, both about the private space, some interesting developments in the private names, as well as the large public names. This webinar will feature a flyover of both areas and also look to some extent at their interaction. It's sort of difficult information to find. We'd like to start by just introducing you to what we mean by online and local commerce, then look through some strengths and some weaknesses as this space has developed and unfolded. We see this continuing to be a very high growth, very dynamic space with some well-known public names and some very important private names coming up, enriching the environment and changing the way people do their online commerce. I think that while most people have a sense this is a large and growing space, very few people understand how large, how rapidly growing, and in many ways how difficult it is to measure given the increasing comfort folks have moving between online and offline. So it gives me great pleasure now to introduce you to Anupam Pallet, who will be piloting you through most of this experience. I will rejoin you toward the end to take questions and deliver some answers. Once again, thank you for joining us, and we look forward to another successful conversation.
Great. Thanks a lot, Max. Again, my name is Anupam Pallet. I lead up our research effort here at Greencrest, and I'll be taking you through some prepared comments. Just before I get started, I do want to mention that we're going to have a Q&A session, a brief one at the end of the webinar. So for those of you who would like to ask some questions, there is a area in your webinar where you can type in the questions. You can just click the questions tab and type it in. We'll be keeping a queue throughout the webinar, so when we get to the end, we'll have a queue of questions and we'll get to them. So no need to wait till the end. As soon as you have a question, please feel free to type it in. With that, let me move forward here. Here's our disclaimer. You can read that here. It's always available to you if you want to request it from us. I don't think there's much more to say about that. Today's discussion now, as we move over to slide 3, the presenter you just heard from, Mr. Max Wolf, who is our chief economist and our as a senior analyst here. Myself, Anupam Pallet, I'm an analyst here and I head up our research effort. And we'll also be joined in the Q&A session by our colleague Santosh Rao, who is a senior analyst here at Greencrest as well. The topics we're going to be covering today are looking at some of the e-commerce statistics, and what we believe is the case, which is that they really understate the impact of the overall web. We'll talk a little bit about Amazon.com and the art of showrooming. We'll talk about some of the challenges faced by the major e-commerce companies, and we'll talk about a couple of exciting private companies in the space as well. So with that, let me jump into e-commerce, which is, officially speaking, a small portion of overall retail. Now, the impact of e-commerce has been widely discussed in the popular financial discourse, specifically the declining prospects of a lot of big electronics retailers like Best Buy. We're talking about big book retailers like Barnes & Noble. This gets a lot of media attention. But the fact remains that, officially speaking, e-commerce is a very small portion of overall sales. The fourth quarter of 2011 represented the highest online spending quarter on record. It was nearly $50 billion, but it was still less than 5% of total overall retail spend. If you look back a couple of years, you'll see that in 2006, early 2006, about 2.6% of total sales were online. Now it's almost 5%, so the relative contribution has doubled, but it's still a pretty small number. Now the chart here, we've done it on a seasonal basis. You can see all the first quarters are together, the second quarters, the thirds, and the fourths. Clearly, this should be no surprise to anyone. E-commerce, like retail, tends to be very seasonal, with most of it happening in the fourth quarter. Now, the fact that it's increasing as a portion of total retail basically implies that it has been outgrowing total retail. We can see that over here on slide 5. That doesn't mean that it's been totally stable throughout the last few years. We can see that when the overall retail environment slid quite heavily in 2009, e-commerce was no exception. Throughout late 2008 and most of 2009, e-commerce actually fell on a year-over-year basis. That has recovered quite a bit now, just as the overall retail environment has. E-commerce throughout the dip, though, did outpace total retail sales. After declining in the 2008 timeframe, late 2008 to 2009 timeframe, we did see a recovery through 2010, 2011 of about 10 to 14% year-over-year growth on a quarter-to-quarter basis. But even those strong numbers, you can see that we've been continuing to accelerate. In the first quarter of 2012, e-commerce actually increased 16.5% on a year-over-year basis. The fourth quarter of last year was an upside surprise in terms of online spending. The first quarter of this year was an upside surprise in terms of online spending. So overall, the e-commerce market looks very, very healthy, and has certainly bounced off the lows that we saw a couple of years ago. Now, the 16.5% growth year-over-year compares to about 6 to 7% year-over-year growth for the overall retail market, which has been, kind of flat growth, so to speak, in the last several quarters. Now, as I mentioned a couple of minutes ago, as we go into slide 6 here, most of the spending actually happens in the fourth quarter, and that's probably no big surprise to anyone. About 31% of 2011 e-commerce sales were in the fourth quarter. That's a little higher than the 26% of total retail. 23% of online sales were generated in the 2-month holiday period from November 1st to December 31st. So when you think about this from a high-level perspective, about a third of the spending comes in the fourth quarter. And within the fourth quarter, for the total year, about a quarter of the spending comes just in the last 2 months, November and December. Holiday spending online totaled $37 billion in 2011. That's those 2 months of the year. That's up 15% on a year-over-year basis. Again, that was above most expectations going into the quarter. Additionally, as we can see by this chart, there were 10 individual days during the holidays where there were more than $1 billion of sales done online. That is versus 2010, when there was only 1 day that was above the $1 billion threshold. So not only is the overall number up, the number of days that are seeing more spending are increasing. Again, the biggest single day here is Cyber Monday. Cyber Monday saw just over about $1.25 billion in sales this year. That was a 22% increase over the prior year, and you see here kind of the next highest spending days online. Now, we talked about how e-commerce is a relatively small portion of total retail, and that is, I guess, statistically true. But we think that there are a number of factors here that actually understate the total impact of online commerce. And that's when we think about web-influenced sales. And what that basically means is that the broader measurements of offline retail spending in terms of the actual statistics, they do not capture the fact that consumers may have spent significant time online either conducting research or comparing prices before they go to the store. In other words, people are using the internet to help them make sales in the offline universe. And that's what we mean by web-influenced sales. It's becoming a bigger and bigger part of the overall e-commerce landscape. If you look at the data from Forrester, about half of all retail purchases will be web-influenced this year versus 42% in 2009, and that is expected to increase over the next several years. So again, more than half of people are using the internet to help them with their offline purchases. You can see this further on the right side of the screen here for the chart on LBS, which is location-based services, and the penetration of geosocial type services. So if you look here, from the data from Pew Research, you'll see that 74% of adult smartphone owners use location-based services in February, and that is up from 55% who used them in May of 2011. So in a few short months, we've seen a tremendous increase in the number of people who are using location-based services. And by these services, what we mean is that directions, recommendations, or other information related to a user's present location. So you can use the GPS technology in your phone to get different kinds of data. Now, speaking of smartphones, 18% of smartphone owners in February used geosocial services. That's versus 12% in May. Geosocial is a type of check-in service, such as those offered by Foursquare or Gowalla. And Gowalla, of course, has been acquired by Facebook. But there's a lot of companies who are doing these kinds of services, location-aware, mobile-enabled services, Looped, Foursquare, Scavenger, Gowalla. So I do want to spend a couple of minutes here just talking about Foursquare because in a lot of ways they are one of the most exciting private companies in this space. So Foursquare is a leading location-aware service provider. Allows people to publicly identify where they are by checking in to certain locations online and mobilely to find nearby friends, capitalize on deals at local establishments, read reviews, and by checking into places repeatedly over time, users can earn electronic badges, and the most prolific users enjoy vanity titles like mayor of a particular establishment. So for example, you go to a nearby store, and the first time you check in there, you get some kind of a discount. And if you're the most checked in person, you'll become mayor of that particular establishment. Some of these are vanity titles, and some of them have real dollar value. In a lot of survey work that has been done here, people have asked users, why do you check in? What are the most valuable aspects of a check-in to you as a user? About 30% of people say the most valuable aspect is deals and promotions. About 17% say it's sharing their location. About 14% say it's associating themselves with quote-unquote cool places. And about 7% say it's scoring points. So you see there's a number of different reasons why people are going to check in, why people like these types of services, and a company like Foursquare will be able to offer kind of all of these individual services. So there's a lot of value for the user, but what about for the business? And our channel checks suggest that it's very, very valuable for the business as well. And they are going to use something like Foursquare as a platform the same way that they would use any other type of promotional platform. That is to drive customer acquisition and customer retention by offering deals that are location aware to people who are literally in the vicinity and who are purchase ready. They're able to get people come into the storefront and to spend money. By having a loyalty type program where you can offer more discounts or more features, more special treatment to people who come back more often, you can drive customer retention. So again, for businesses, it's all about acquisition and retention. Let me give you a couple of examples. At one of the fitness centers near our office at Greencrest here, there's a free 7-day pass provided for a customer when they first check in on Foursquare at that location. And there's a free bottle of water every day for the mayor. A local restaurant here that makes hamburgers gives a free soda whenever someone comes in and checks in, and the mayor receives a free hamburger on Mondays. So you can see, a check-in at the end of the day doesn't cost the user anything, but just by doing that simple act, they can get different kinds of rewards, whether it's a discount or whether it's a free item. It makes them feel special, and the more often they do it, the better treatment that they get. And eventually, if they are able to get 10 check-ins, 20 check-ins, or eventually become mayor, you can see that there is a tangible and a dollar value associated with these types of check-ins. Now let's get into Amazon, and I want to mention Amazon because they are by far the largest internet retailer in the space. They dominate the e-commerce landscape. At their size, they're about 5 times larger than the next player in the space, and they're actually bigger than the next 9 all combined. At $50 billion, they dwarf everybody else in the space. Now, the second largest is Staples, You've got Apple, you've got Walmart, you've got Dell. Now, this just looks at the e-commerce business of each of these companies. So, of course, Staples and Walmart are much larger than these numbers. We're just looking at the online sales portion of these businesses. So what's happened over time is that this concept called showrooming, where consumers go to stores to find items, but then they go home and they eventually buy them online. And the reason we call them showrooming is because they're using the retail operation essentially as a showroom to look at items, to touch items, to look at the colors, to evaluate them, and then they go home and buy them online. And this is obviously a big concern for retailers and is one of the primary reasons that they have actually gone and begun to build their own e-commerce businesses. Mobile apps like Amazon, mobile app, Milo, Red Laser, they're all further driving this phenomenon. So if you think about what these apps can really do, you get a sense of how they're disrupting the space. So for example, Apple's or Amazon's mobile app allows consumers to scan a barcode and find the price and availability of that product on Amazon. eBay's Red Laser and Milo allow users to perform local and online price comparisons. And the implications of these are very clear. Customers who are standing in a physical storefront can use the mobile web to find a better price, either online or in a different offline location. And in fact, the data suggests that they're doing just that. Last holiday season, about 52% of all adult cell phone users employed their mobile devices to seek help with a purchasing decision while they were standing in a physical storefront. 38% of cell phone users called a friend for advice. 24% looked at product reviews online. And perhaps of greatest concern, 25% looked up the price of the product online. Of course, there's overlap because a number of people do a number of these things, but you get a sense of how important this is. Now, for those people who looked up the price online, 19% of those people did actually purchase a product online, so they didn't do it in the store. Another 8% purchased a product at another store. Only 35% of people who did who looked up a price online in a storefront actually bought the product at that store. So you can see that online price comparisons are driving customers away, either online or to a different store, or they're not buying the product at all. So you can see how extremely important this is to retailers. Now, it's not all roses for the big internet retailers. There are substantial concerns that they have, and we're seeing it quite a bit right now. As online commerce has grown, as the service offerings have improved, you see a lot of challenges coming to the traditional e-commerce type model. So if you think about one of them, Amazon, you can see this in the data here. And in its initial incarnation, Amazon was essentially exclusively a bookseller. They delivered newer books at an attractive discount to retailers, and they could offer older books, which the retailers simply did not have on their shelves, right? The old long tail theory. But what's happened over time is that their service has had to evolve. There's a couple of issues that they've had to deal with to build their physical footprint out. So the first issue is that Amazon, like all e-commerce providers, must deal with the reality that an online purchase does not yield immediate consumption of that good. In other words, when customers purchase a good in a physical store, they're able to use the item immediately, right? So if you go buy a book at a retailer, you can read it pretty much as you're walking out the door. If you go buy a CD player or a toaster or whatever it is, you can use it pretty much as soon as you buy it. But for internet sales, the customers have to wait for the shipment. They have to wait for the good to arrive. So to help alleviate this problem, Amazon offers attractive shipping opportunities. Often they're for free, and often they're for a subscription. So for example, Amazon Prime guarantees 2-day delivery on selected items for an annual membership fee. But in order for them to meet these kinds of service deadlines, they have to keep substantial inventory on hand in their own fulfillment centers. In other words, they have to build out a big physical footprint. The second thing here is that Amazon allows other sellers to use it as an e-commerce platform, so other sellers could have their own products. They'll sell through Amazon. These sellers ship their goods to Amazon. Amazon holds them in storage, and then when there's purchases, they ship them out to them. Again, they have to hold this type of inventory, and they've been building out lots of fulfillment centers, and you can see the impact that this has had on their overall financial profile. If you look at this chart, you can see, and again, you have to kind of seasonalize this chart. So if you look at, for example, the fourth quarter of 08, of 09, of 2010, 2011, you can see the sales are continuing to increase, but the operating margin, which Amazon calls CSOI, is declining. The margin has fallen from about 6 to 7% in 2009 to 2 to 3% currently. So what's happening to Amazon and internet retailers is the same thing that has happened to offline retailers. This, at the end of the day, is an extraordinarily thin margin business. The second big challenge that we're talking about today is the issue of the sales tax. Right now, most states do not require internet retailers to collect a sales tax on their sales. If you look at data that has been released by the advocacy group Streamline Sales Tax, if you look at the National Conference of State Legislators, they basically estimate that states lose $20 to $23 billion in lost annual revenue because of online sales. So the pressure is being put on them. E-commerce sites have been playing hardball in recent years with the state, so threatening to leave the state, threatening to walk away or to not hire people unless they can continue that advantageous tax situation for them. So Amazon Overstock, for example, have been very aggressive in recent years with Connecticut, Texas, and South Carolina. And this comes up against traditional retailers who say they essentially have a 5 to 10% sales tax disadvantage because they have to collect the sales tax on these purchases, whereas Amazon doesn't have to do it. So there's a couple of issues that are taking place here. First of all, states are under a lot of pressure to increase revenue right now. It's a very difficult time in the economy, and states are experiencing budget shortfalls. So 20 to 23 billion in aggregate revenue is a very big number. Additionally, the lobby for traditional retailers is increasing. And finally, of course, the e-commerce sites are essentially running out of states to leave, right? There's only so many states you can threaten to pick up and leave before eventually it's going to catch up to you. So what's happened now is that states like Kansas, Kentucky, North Dakota, New York, Texas, Washington have all implemented sales taxes on purchases. And over the next couple of years, you're going to see more from implemented at California, Indiana, Nevada, Tennessee, New Jersey, Virginia, and South Carolina. And I'm sure there's going to be a lot more states that are going to be following them. So again, sales tax, that regulation that's going to most likely begin to change is going to be impactful. And the final thing that we want to talk about is category killers, which is the third big challenge that we have. We want to highlight a couple of private companies right now. Category killers essentially, as Amazon grows and broadens its offering, what essentially happens is that new sites that can drive passionate community around a certain niche type item can begin to take shares. So you go to Amazon to buy anything else in the world, but it's not exactly a passionate community. They don't specialize in anything. You can't learn as much about the products. So new categories or new players in these categories are emerging. So let's take a look at Etsy, which I think is a very interesting place. It's an e-commerce platform where sellers can sell handmade goods and vintage items. Now, the handicraft market is essentially flat, but the online handicraft sales are growing pretty nicely. The advantage that it offers to buyers are really four things: simplicity, transparency, authenticity, and most importantly is community. If you look at the company's performance, the ASP, or the average selling price, is going up very, very strongly. It's about $12 in late 2008. It's nearly doubled to about $22 right now, so it continues to rise, and we anticipate that's going to continue. As well, if you look at the data in the number of sold items, and if you look at the growth in new listings, the new listings numbers recover quite nicely, and the sold items have slid, but it still remains extremely, extremely strong, so a mid-double-digit type growth. So again, this platform is seeing more activity on the site. The amount that they're selling is increasing, and the average price that they're selling it is also increasing. So Etsy is a very interesting company that is, it's kind of like a second stage of disruption. Amazon disrupted the traditional retail market, and these category killers are disrupting the actual e-commerce market. The second private company that we want to take a look at is Gilt Group. They are an e-commerce platform that is focused on the luxury segment. And in the few years they've been around, they had absolutely phenomenal growth. The average subscribers and the number of orders has scaled very, very impressively, as you can see by the chart on the screen here. And if you look at the financial performance, it's been very strong on the top line. 2011 revenue of just over $600 million represents a 24-fold increase from 2008 levels. This implies a CAGR of nearly 200% during those intervening years. About a quarter of the company's subscribers are men, and about a quarter of the revenue comes from men's products. There's been over 250,000 downloads of the mobile app, and mobile represents anywhere between 17 and 30% of the company's sales. So again, e-commerce has risen quite substantially, and the big players like Amazon still really dominate the space. There are three big challenges to them. The category killers, like we've talked about just now, the sales tax issue, of course, is very important, and of course the long-term kind of profitability model and whether these companies are going to have essentially retail-like margins over the long term. So that concludes our prepared remarks. We've seen a lot of questions that have been coming into the queue, and what we're going to do right now is take a couple of minutes and continue building that queue of questions. We'll take about 30 seconds or 60 seconds just to continue building that queue, and then we'll spend a few minutes answering your questions, and we're going to get to as many as we can. So again, thank you for joining us, and we're going to wait a couple of minutes here for questions. While you're waiting, take a look at the screen right here. It's got all our contact information, and what we'd love to do is, what we don't want to do is have a one-sided conversation and be kind of talking at people. This is supposed to be very interactive, and what we've done after every webinar, and we always get a very good response from people, is that they'll follow us on Twitter, they'll call us, they'll reach out to us, they'll email us, and we have a lot of great conversations. This webinar is really a conversation starter. That's what we always try to do it. So please take a look at the contact information on the screen. Please feel free to reach out to us. And again, we're going to wait about 30 to 60 seconds here just to continue to build the queue of questions, and we'll be back with you momentarily.
Thank you for bearing with us. Of course, we have the best problem possible, which is too many great questions, so we'll do our best to get through as many of these as we can. I'm Max Wolf again, and I'll be introducing the questions and then turning them over primarily to Anupam Palit and Santosh Rao. So our first question is, can you provide a little more background on the sales tax issue? We know this is a big issue from the state legislative perspective. It's becoming a bit of a political issue, and given the fiscal conditions of American states and cities and our forecasts related to those conditions, we assume this will be with us in various manifestations, various forms for the foreseeable future.
Great, thanks, Max, and thank you for the question. So this kind of dates back, going back a few years, where after a software company several years ago in North Dakota decided to not collect sales tax because they didn't have operations in states outside North Dakota, the North Dakota Supreme Court said, you're going to have to collect sales tax. This went up to the U.S. Supreme Court, and the U.S. Supreme Court said, no, you don't. If you don't have what we call a physical nexus in the state, then you're not going to have sales tax. So as e-commerce grew in the U.S., so did the number of people selling goods, essentially without sales tax. And so over the last few years, what's essentially been happening is that e-commerce has grown to such a big extent that traditional retailers are saying, well, that's really not fair. It shouldn't matter how you're buying the product. At the end of the day, if you're making a sale, whether offline or online, you're going to have to pay sales tax. That's the only fair thing to do. This is coming along with states that are increasingly in budget problems. And it's also becoming an issue that what defines physical nexus as well, because Amazon, of course, has fulfillment centers in different states all over the country. So as the physical footprint grows, as the e-commerce market grows, and as budget pressure on the states continues to build, I think what we're going to see is more and more pressure on these companies to sign individual agreements with the states to incorporate sales tax collection for all sales, whether offline or online. Max, next question.
Thank you, Anupam. Our next question is, could companies do sales through the newer social media sites like Tumblr or Pinterest? With particularly several questions along the following lines, is there any actual e-commerce being done on Pinterest? Pinterest seems to have drawn a lot of interest here today, as in so many other instances.
Great, thanks, Max. I'm going to turn this one over to my colleague, Santosh Rao. Santosh is our analyst on Tumblr and Pinterest, as well as a few other names. So, Santosh, I think you'll probably be in the best position to answer this one.
Thanks, Anupam. Yeah, to answer your question, yes, e-commerce can be done through Pinterest and Tumblr, but it is early, in our opinion. Both sites offer a visually engaging platform for brands and retailers to showcase their products. But our checks suggest that e-commerce on the site is not significant at this point. Both are still in the process of formalizing their strategies. Between the two, I would say Tumblr is more a blogging platform and less suited for e-commerce than Pinterest. E-commerce on Pinterest, on the other hand, is picking up. The site lends itself for e-commerce because of its format. We expect that to pick up significantly over the next year following their new partnership with Rakuten, the major Japanese e-commerce internet company, who invested about $100 million in Pinterest recently, and also a growing number of brands and businesses that are establishing a strong presence on the site. So overall, I would say it's still early, but down the road, we expect e-commerce to pick up on both sides. Thank you.
Thank you, Santosh. I think we're going to try to put several questions together going forward because there's just, unfortunately, so many questions, but we'll try to get to the spirit and the general area of each of the questions, even if we can't get word for word explicitly to every one of your inquiries in this call. And again, you have our contact information. Please feel free to reach out to us. We look forward to helping to contour future webinars and engaging so we can be instructed the best way to do what you most need with your valuable time vis-a-vis the Greencrest webinar series. So the next question, a bit of a combination, is do you anticipate other category killers coming into the market? How do you think Etsy and Gilt will do versus Amazon? Do you think Amazon will end up in a dominating position? And I'll turn this one over to Anupam Pallet.
Great, it's a great question. I mean, I think that category killers in a lot of ways are here to stay. When you think about this market, what's increasingly happening is there's a social aspect of commerce that's taking place, and that is kind of it's not just as simple as shopping with friends. It is about finding kind of a passionate online audience, and you see this not only in commerce but other things as well. So, for example, a broad social network might be that I bring all my friends offline, everyone I've ever met, and now we're all friends online, and that's how we live. The problem with that, of course, is that my friends, either offline or online, may not be passionate about the same things that I'm passionate about. So, my colleagues here, Max and Santosh, they're my friends and they're on my Facebook and that kind of thing. But, I really love playing guitar, and I own guitars and I go guitar shopping, but the two of them don't. So it's more, for that particular type of purchase, it's more valuable for me to have a conversation with somebody who I may or may not know, but who is somebody who is passionate about guitars and passionate about playing them and buying them and looking at the wood and thinking about the playability and the weight and all that kind of thing. So that conversation is more valuable to me. And so what these category killers are doing is building those kinds of communities online. So whereas on offline you may have friends who are not interested in handmade jewelry, but you are personally passionate about that. Maybe you're a seller, maybe you're a buyer. You go to Etsy and you're going to find that passionate community of people. You're not going to get that same thing on Amazon. Now, I'm not trashing Amazon. Amazon's great. It's enormous. It often has very attractive price and delivery options, but you're not going to get that same small market community that you're going to get on a place like Etsy. So I think category killers are here to stay. Now, from a broad perspective, I do think Amazon is going to dominate the space, but there is going to be plenty of room for category killers over time. So I think what we're going to do is I'm going to turn it back over to Max. I think we have time for one more question. So we'll take the next question, and we'll call that one our last one. Max?
Do internet retailers have any other revenue sources besides just consumer product sales? Is there any way to leverage their infrastructure for other types of products and services? This will be our last question. I'll turn it over to Anupam now.
Great, thanks, Max, and thanks again for the question. This is really a great question. I think for most of the retailers, I think the story is going to be that they are going to stay retailers. There's very few opportunities to do other types of revenue except for the actual product sales, with the one small exception, and that is basically advertising. And we're seeing that with the major e-commerce players as well as with some of the leading location-based services. And so some places are going to have traditional display type advertising. I think you're going to begin to see some of that more broadly on Amazon as they can, they have so many page views, they can start putting some banner ads all over the place and have a pretty decently sized advertising platform. We're going to see it in places like Foursquare as well, but more promoted type accounts. So for example, if you're walking into a neighborhood, your Foursquare is on and it can tell where you are through the GPS. A business that is in your neighborhood will be able to kind of push out a promotion to you, and they'll have to pay Foursquare for the privilege of being able to do that to you. So the type of promoted service or a promoted account or a promoted deal basically is going to be a different type of advertising that you'll be able to do. So I think internet retailers in general are going to be mostly product sales with some advertising layered in there. If they can build their data, then I think there's an opportunity for them to have other types of sales, especially their infrastructure. And the company I'm thinking about here is Amazon. Amazon Web Services is basically, they have so much basically computing infrastructure that they can resell a lot of that data to cloud services companies. Amazon, in a lot of ways, is the backbone behind numerous companies in the space. You know, call it Instagram, call it Dropbox, call it Reddit, call it Quora, whoever you want to. A lot of them build on Amazon Web Services backbone. So they're driving a lot of these consumer cloud, consumer social media services. So they're probably the exception because of the immense amount of computing power that they have and the infrastructure there. But in general, I think you're going to see the retailers focusing on retail and layering in some advertising on top of that. So I think we've hit our time limit here. But I did want to, once again, thank you. And again, please stay in the conversation. You have our contact information there. And I will turn it once more back to Max Wolf to close.
Let me echo Anupam in saying thank you. By the way, those of you who are part of our subscriber community should stay alert because you'll be getting our sector report very shortly. Those of you who are not yet part of the subscriber community but would like to do so, would like to join us, we'd be happy to walk you through our onboarding process. Again, you have all of our contact information here on your screen. We look forward to future conversations, to answering all your questions in person via email or at our next meeting with you, and getting your response to our forthcoming sector report for subscribers. Thank you. Goodbye.